Well, Australia is an energy supplier to the world, and when energy is in demand, Australia is supplying lots of energy to the world, and that has actually put pressure on domestic prices. So we've come through a period of relatively low wholesale prices and then a sudden shock in the middle of the year that took many utilities time to adjust. We had already sold forward our electricity at relatively low prices. We then were plagued with some reliability issues at one of our plants. Coal was actually in short supply for most of the second half of the year as well. So having contracted to sell power at reasonably low prices and then having to buy replacement power in the spot market was really what affected our business there. Now, we've done a number of things to address those problems in the short term, to increase the availability of supply, to get our plant running more reliably, and also to adjust our contract positions. But that will take time to see through.
Are you going to be continuing to invest in Australia?
We see Australia as an important part of our portfolio, and whilst we have a very strong focus on our core markets in Hong Kong and mainland China, we also like the diversity of keeping a broad portfolio, geographically diverse. So yes, we do see Australia as a good long-term investment for our portfolio.
Back here in the home market in Hong Kong and China, faring relatively well, but I do have to take note of the higher electricity bills that everybody here in the city is bracing for. Now, you've raised tariffs in January, but for the year, CLP is looking at a 20% increase, all the CLP customers. For Hong Kong Electric on the island here, an increase of 45%. Now, other parts of the world are dealing with cost of living crises. Is this what's happening here in Hong Kong too?
Well, Hong Kong is no different to the rest of the world. The entire world is seeing an energy crisis, and that is because so much of the world's energy was supplied by Russia, and now that has having to be replaced by other markets, and that's really put pressure on prices globally. Hong Kong imports 100% of its energy. It is the most energy-dependent economy in the world, so we cannot be insulated from these global shocks. What we have tried to do is to manage that shock in as smooth a way as we can. So yes, there has been some steady increases during last year. We try and manage that through diversification so that we already have long-term supplies of natural gas and coal and oil from as many parts of the world as we can, so that we're not dependent on any one market. We do the best we can, but unfortunately we will have to see these prices pass through to customers.